Associate Finance Minister Randy Boissonnault says this year will be a turbulent and uncertain one for the Canadian economy. Speaking to reporters at the Liberal cabinet retreat in Hamilton today, the Edmonton MP insisted the government still has some spending room for big priorities, including a new healthcare deal with the provinces. A recent report from the Business Council of Canada and law firm Bennett Jones warned that the Liberal fiscal forecast was likely too rosy. The cabinet retreat comes amid high inflation, warnings from some economists of a potential recession, and major job losses in the tech sector. Well, with us now to discuss all this is Dr. Moshe Lander, economics professor at Concordia University. Dr. Lander, welcome back to Forum Daily.
Hello.
Now, the outlook here seems to be pretty grim. We're hearing this even from the Bank of Canada governor, but it seems that the federal government is thinking quite optimistically, at least when it comes to their political commitments. So, what is your takeaway from all of this, Doctor?
So it's probably a little bit of both. They do have room to spend on healthcare. The type of long-term investments that they're talking about usually pay themselves off in the long run. But the problem is, you're right. Their projections for what GDP growth will look like, the risk of a recession, they're probably a little too optimistic, and they don't update those often enough, the way that the Bank of Canada or private sector forecasters would. And so they're probably working on a little bit of an outdated view as to how resilient the Canadian economy is.
Now, meanwhile, as you mentioned, economists are debating the likeliness of a recession in 2023. What have you been hearing about this?
Yeah, I mean, if we see a recession, right, that's, a slowdown in GDP and in fact negative growth. I think even if we see that, it's probably not going to be the type of recession that Canadians are used to experiencing. Contracting GDP is usually accompanied by jumps in unemployment. But 6 months ago, we were talking about businesses were desperate to find workers. We had job or help wanted signs all over the windows. I think what they'll do this time is, if we do experience a recession, they'll just take those help wanted signs out of the window and just say, I'm good with what we've got. They had a hard enough time finding a lot of these workers in the first place. I don't think they want to let them go and then have to try and find them again. So I don't know that we'll see necessarily the economic devastation that usually comes with recessions.
All right. Well, amid these certain uncertainty of a recession in 2023, can you tell us a little bit more about the key indications of a recession and if any of these indications can be seen in Canada right now?
So I think the big one is going to be that if there is a recession here, it's going to be triggered by that rapid increase in interest rates. The anticipation that there's an increase coming tomorrow even would be the eighth one in about 13 months. So if we do get tipped into a recession, probably the indicator of bad times coming are going to be a rise in personal bankruptcies, business bankruptcies, delinquencies, and some signs of stress from consumers being able to meet their debt obligations. And so we've already seen a little bit of that, but it's not necessarily flashing in the way that would indicate that there's a really bad recession coming. But of course, those interest rate increases take about 18 months to work their way through the economy. And the big increases came in the middle of 2022. So we've still got a little bit of time to see if there's those real warning indicators that something's not right.
All right. And building on that, we know, as you mentioned, the interest rate hike is expected to be tomorrow, a quarter of a percentage point. All of this to wrestle inflation. But have these interest rate hikes that we've been seeing throughout 2022, have they had any impact on inflation at all?
So they have been working. And like I said, it takes about 18 months to work their way through. So if you imagine that those first increases, which came early in 2022, were only 25 basis points, even the occasional 50 basis points, they still haven't had their maximum impact. But we've seen inflation come from 8.1%, I think, in June last year to now 6.3%. So even without the full impact, we're seeing that there is an easing of inflation. Will it get down to 2%? Well, if the increase tomorrow is 25 basis points, the projection seems to be that that's needed to get us to 2% 18 months from tomorrow. So we should be circling our calendars for mid 2024 for when we can say mission accomplished.
All right, Dr. Lander. So, how do you see all of this impacting the quality of life and the rising cost of living in Canada during 2023 itself?
So it's going to be another rough year. I think that workers are going to try and negotiate with employers for higher wages. And I think the pushback is going to be that time has passed, right? That inflation is on its way down, and the Bank of Canada has done what's necessary to get us back there. So if the pushback is, no, you're not going to get it, then I think 2023 could be another lost year in terms of purchasing power, that we're going to see consumers see another drop of 4%, 5% in their purchasing power. Couple that with the drop last year of another 4 or 5%, kind of hurts a little bit. But the good news is that if productivity remains strong, we can recover a lot of those losses in 2024, 2025. And in a few years' time, this will just be a blip in the highway of life rather than the pothole that we seem to think it is right now.
Always good to end on a positive note. Dr. Lander, thank you again for joining us today.
Anytime.